Ladies and gentlemen, welcome back to the channel. AMC Stock is up 5% today and actually breaking out above your 50-day moving average. This could set AMC Stock up for a much larger rally from here, but we do have to see this hold into the close of the day today, and there's going to be some events coming next week that are potentially hazardous for the markets and could be hazardous for AMC as well. So we have a lot to get into. We also have a warning out from Goldman Sachs. They are advising their clients to do one thing in particular, which is a very interesting thing: hedging their portfolios. At a time where everyone is bullish and stocks are hitting all-time highs, Goldman Sachs believes you should be hedging using this instrument. We'll go over that, exactly what they said here yesterday, and my thoughts around that. Hit the like button, subscribe to the channel, let me know what you think about this information down below in the comments section. First things first, again, AMC stock is up 5% today, 5.15% to be more specific. You are now above your 50-day moving average. First time in a long time that you have been above that moving average. You were above this before earnings, and then earnings kind of crushed some people's hopes and dreams, and you fell back under that 50-day moving average. Now you're above that again. Maybe that does mean a larger rally is coming, and as I said before, if you get above that 50-day moving average and you don't see the roof cave in on the markets, then maybe that could set you up for about a 35% rally to your 100-day moving average, which would be around $6.06 per share. That's what I could plausibly see happen. Typically, if you get above your 50-day moving average, you make your way towards your next major moving average, which is that 100-day moving average. So we'll see exactly what happens. The RSI is actually neutral at 49.78. Neutral is 50. So there's definitely some room there on some of your strength oscillators to say we could go through a larger run here. And your MACD, pretty neutral overall, but it looks like your yellow line, your MACD line, is crossing above your blue line today. That's a pretty good indication of continued strength to come. Now, what's actually interesting today is the Russell 2000 is the outperformer. The Russell is up 0.5%. The NASDAQ down over 1%. The S&P down over 0.5%. And the Dow is down 0.36%. I think part of the reason for the outperformance today is investors are just rotating. They're saying big tech is expensive. The areas of the markets that drive the markets higher, like the NASDAQ and the S&P, they're just expensive, right? So if we do go through a broader kind of pullback here, maybe in the next couple of weeks, like Goldman Sachs suggests could happen, then maybe you want to be in your small cap stocks because they're probably already priced for bad news. They're priced for a hawkish Fed. They're priced for, bad earnings. There's just a lot of bad news priced into small cap stocks. So I think this is the right move for a lot of investors to be looking at these small caps as of right now. But again, small caps are definitely outperforming. Russell 2000 is up 0.38% today. The VIX is up 3% today as well, so that's also pretty notable. Now, we don't have any company-specific news on AMC to go over. I guess Wedbush reaffirms their neutral rating for National Sin Media. That's obviously not AMC, but it's another company in the space, and that can't be seen as bad news if a competitor essentially gets good news. We know that AMC and Zoom launched their hybrid meeting spaces in U.S. theaters in 8 locations, 8 cities really. That was yesterday. So that could also be having somewhat of a lagged positive effect on AMC stock. As far as data, we really only got one piece of data, and that was Michigan consumer sentiment. This came in a little bit lower than estimates, so maybe an algorithmic kind of move in your Russell to send that higher could make some sense. The number came in at 76.5. Last month, you were at 76.9, so a little bit of a downtick there, but really everything came pretty much in line with estimates. 5-year inflation expectations stayed at 2.9%, same as last month and same as the estimate. Michigan consumer expectations came in at 74.6. Estimate was 75.1. Last month was 75.2. So that fell a little bit more than expected, and Michigan current conditions actually beat. So that's weird. Expectations from the consumer came in weak. and current conditions came in strong. Michigan current conditions came in at 79.4. The estimate was 79.2. So kind of strange. And 1-year inflation expectations came in at 3%. Same as the estimate and same as last month. So I could see why this could give the Russell a little bit of a boost, but it's really not a big deal in the grand scope of things. You kind of were in line with the estimates across the board here. Now let's take a look at StockTwits and the sentiment around AMC stock. Another big reason why markets are down today. If you look, Microsoft and Adobe down quite a bit today. Adobe is down 14%, really throwing some cold water on the AI trade. I guess to some degree, it's highlighting the semiconductors like NVIDIA. They're the ones that are really benefiting from the recent AI wave, and that really throws into question, let's be honest, if these companies that are buying these GPUs, like an Adobe, like a Microsoft, like some of these other guys, if they're not able to monetize that investment quickly, then they're probably going to slow down that investment at some point, and that's ultimately bad news for NVIDIA. Markets are not taking it as that today. NVIDIA is up over 1%. Nonetheless, sentiment for AMC today is bullish at 58. Yesterday was neutral at 51. Message volume today is normal at 50. Yesterday was normal at 48. And the participation ratio is at 55 today. That's higher than the 54 reading that we did see yesterday. So StockTwits, things are getting incrementally better today. Nothing too crazy, but it's definitely heading in the right direction. Now, Adobe specifically reported good earnings but weaker guidance on a key revenue metric. This one, it's media net new revenue. They guided for $440 million, missing analyst estimates of about $460 million. Adjusted EPS was expected in a range of $4.35 to $4.40 on revenue of $5.25 billion to $5.3 billion, compared with analyst estimates of $4.39 on revenue of $5.31 billion. So a little bit of a guide down on the low side, a slight guide up on the high side. So really nothing impressive. They did slightly beat on guidance for revenue, but it's really not that AI kind of guidance, right? It's not even close to anything like NVIDIA. They really just did not impress, right? And that's the thing. These stocks are priced to impress. Microsoft, Amazon, they're all priced to impress right now. And that's kind of the troublesome thing about this market is expectations are very, very high. Now, Goldman Sachs, they just came out with a new warning yesterday. They see a big jump in volatility coming in April. The VIX is jumping today as stock market slumps, but analysts at Goldman Sachs think it could rise much further from here. The volatility index offers a good hedge on stock markets as it rises exponentially as equities fall. Goldman Sachs says its volatility model sees an average of 21.5 on the VIX in April compared to the current level of 15. So this is the VIX. I'm sure you guys are pretty familiar with this. The VIX used to spike a lot in like 2022 and some parts even in 2023. The VIX would actually spike into the 20s, into the 30s. Well, that hasn't happened in a long time, right? Back in 2022, you made a lot of money if you just bought stocks when the VIX got back to 20, right? Or to 30. And you sold stocks when the VIX got to 20. It seemed like such an easy strategy, just looking at the VIX and judging your decisions on what you should do based on that. And the VIX, just so you guys know, is measuring calls and puts on the S&P 500. So if there's more puts heading onto the VIX goes higher. The volatility index, the fear gauge, as people call it. If there's more calls going on to the S&P, then the VIX is going to stay low and maybe even drop. Well, the VIX has been low ever since really December, if you will. October, November was the last time the VIX spiked to 21, 22-ish. And 20 is considered kind of high, but like a real crash event, you're like 40 plus, right? Or 35 plus. So you haven't even been close to a crash in a long time. The last time you were close to a crash was October, November of 2022. That's the last time the VIX was, 34, 35. Today it's at 15. It's been very low for a long time now. And I mean, I can't argue with what Goldman Sachs is saying here. They say, we believe 1, VIX at a historically low level, SPX close to all-time highs, 3, high demand for upside asymmetry, 4, our model estimated upside to VIX, and 5, upcoming macro/micro catalysts offer a compelling case for investors to own VIX calls. Over the past 30 plus years, VIX has averaged 19 in April, and we see upside risk to the current low VIX levels, given current macro environment and upcoming macro/micro catalysts. S&P 500 index skew is close to multi-year lows, indicating that the upside asymmetry is crowded, and we believe VIX calls will be an attractive hedge in the case of a pullback in equity. So they're telling their clients, or suggesting to their clients, that they buy VIX April $16 calls. So VIX April $16 calls. You can't buy contracts on the VIX outright on some brokerages like a Robinhood. I don't believe on Webull as well. You have to go to like TD Ameritrade or some of those other brokerages to actually buy contracts on the VIX, but you can use UVXY. Now, I think the triple Qs, the NASDAQ, the S&P, it's going to work for the same kind of thesis that Goldman Sachs has here. One big event coming next week that I'm a little concerned about personally is going to be the Fed meeting. The Fed meeting is on Wednesday, and let's just be honest, every single inflation report you have gotten, CPI, PPI, PCE, has come in bad for 2024. And I think the Fed was expecting inflation maybe doesn't like continue to plummet, but some incremental progress on inflation coming down. The Fed said over and over again, they're going to start cutting rates when they're more confident inflation is coming down to their 2% target. You got to be less confident today that that's actually happening. That's one part of it. The other part of it is the Fed has essentially taken off the table a rate hike. Whereas I don't think the Fed thinks they're going to have to raise rates again, but I don't think the Fed can afford to throw that out the window. I don't think the Fed can afford to back themselves into a corner here and commit to no more rate hikes. I think the Fed has to say, if the data continues to come in hot, we will raise rates again. I think the Fed has to say that. They literally have to say that. And I think that's something equities are not priced for, and I think that could be bad news to markets coming next week. Unfortunately, we are in a Fed blackout period, so we're not getting any new information. We're not getting anything that's, new information from the Fed. We're not hearing any Fed speakers, none of that. You were supposed to see, was it Australia or some other central bank, can't remember right now, raise rates overnight, and they did not. I believe it was Australia, or lower rates, and they did not. I believe it was Australia, but I could be wrong there. So they kind of upset the markets. I believe it was Australia. Doesn't matter, but you are starting to see central banks getting a little bit more, I guess, if you will, conservative on their projected rate cutting path ahead. Now, with that being said, let's go over the Ortex data with AMC Stock. And you do have cost to borrow fees at about 4.33%, indicating a little bit more shorting activity may be taking place today. Short interest percentage of free flow at 12.81%, $143.44 million currently in short positions. Days to cover 2.15, 33.59 million shares that are currently sold short. Shares out on loan 43.68 million. Cost to borrow 1.08%, utilization of 58.74%, and a short score of 66.89 out of 100. So numbers staying pretty stagnant, not doing a whole lot of much, but definitely not getting worse. Now, if you take a look at the option activity today from hedge funds and institutions, that's remarkably pretty positive. After yesterday's numbers were not so positive, you have had 6 orders totaling $747,000 with a positive order value of 86%. As you also likely know, today is a big week, big ending of a week for AMC options. You do have 272,000 calls out the money for today, about 12,000 calls currently in the money, 26,000 puts in the money, and about 111,000 puts that are out of the money. So hundreds of thousands of options for this week's expiration. Some of those are probably going to get rolled over to next week's expiration, but today's really a big week for the entire markets. It is a triple witching, and there's trillions of dollars of expiration. So, or of dollars of notional value that is expiring. Now, what I want to see is what the positioning looks like in the broader markets by the end of the day today. People have been so bullish. Options have paid out well. Do they roll those over? Do they sell those options? Do they exercise those options and continue to be bullish? Do they get a little bit defensive here? Do they start buying some puts? Do they become kind of neutral? I want to know what is, the positioning after this latest rally that we have had and the first triple witching of 2024. Now, again, AMC stock is currently up about 3.75% as the markets are starting to fall. You are now under your 50-day moving average. So in the next video, we'll talk about that and if we actually do get above our 50-day moving average and what that could mean for AMC stock, what my expectations are around that. Hit the like button, subscribe to the channel. Let me know what you think about this information down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.